I'm delighted today to welcome over 200 members and friends, or members of ACBC, to our virtual trade update with our friends from the Australian Embassy in Beijing. Today's event represents part of ACBC's knowledge pillar and our commitment to keeping our members abreast of the latest developments in the China market and the broader Australia bilateral trade relationship from qualified experts on the ground in China. Australian business, now more than ever, needs reliable information to help them make the best decisions and be prepared for the fluctuating trade environment we've become adjusted to over the past 12 plus months. And the fluctuations come thick and fast. Revelations last Wednesday of the new Australia-US-UK AUKUS alliance, followed a day later by China's request to be included in the CPTPP, the 11-nation trade deal representing 13.4% of global GDP, will no doubt reverberate around business communities here and in China. As these adjustments play out on a global stage, what does this mean for Australian business? China remains our largest market for exports and international students, and with Victoria's roadmap announced on the weekend, new and renewed opportunities are emerging for the innovative and adaptable Australian marketplace to engage with China. To provide a comprehensive update to bilateral trade, including key growth areas, I'm delighted to introduce our two speakers for today, Andrew Carter and Kevin Thomson. Andrew is the Trade Commissioner for Education in Greater China with the Australian Trade and Investment Commission. Based in Beijing, Andrew is responsible for the overall leadership and direction in promoting international education across China, Hong Kong and Taiwan. Following Andrew, we will welcome Kevin Thomson, Economic Counsellor from the Australian Embassy in Beijing for the Australian Department of Foreign Affairs and Trade. Kevin commenced in his role in September 2019, managing trade and economic reporting for the department. He has particular experience with free trade agreements, acting as negotiator for Australia's FTA negotiations, not only with China, but also Korea, Chile and the Gulf Cooperation Council. After we hear from our speakers, we will have time for Q&A, for which we've had numerous pre-submitted questions come through. We'll also try to take some questions from you today, if time permits. Please submit these via the chat box at the bottom of your screen, and I will moderate them during the Q&A session. I'd also like to remind guests today that the briefing is conducted under Chatham House rules. I'll now hand over to Andrew and Kevin in Beijing, and thank you both again very much for your time today. Thank you.
Thanks, Virginia. Just to elaborate a little bit, I'm Counsellor on the Trade and Economic side of Foreign Affairs and Trade here at the Australian Embassy. So the area that I come from essentially covers trade, investment, energy, environment, and the Chinese economy from a foreign affairs and trade perspective. I've been acting Minister Counsellor here for a while, and we've just had a new Minister Counsellor who's joined us on the ground. His name is Simon Faber-Bloom. He has an extensive trade background and has had previous postings to Japan, Geneva twice, and Thailand. And he brings a lot of knowledge to the team here and will probably be a future addition for these kind of calls going forward. Today, I just wanted to start before Andrew, just to give a bit of an introduction to the conversation. I'm going to provide a broad brush update on China's economy, the Australia-China trade and economic relationship, and some developments in the political relationship. So turning first to the economy, on the whole, our assessment is that China has managed COVID quite successfully, including, it now seems, the recent outbreaks of the Delta strain. As a result, the Chinese economy has experienced one of the strongest recoveries from COVID globally and is transitioning to a more normal growth path in line with pre-COVID levels. You can see this in some of the statistics that we see coming out recently. For example, when compared to 2019, the Chinese economy grew by the equivalent to 5.3% a year in the second half, which is essentially a full recovery from the dip that we saw last year, in the first half of the year, which is essentially a full recovery from the dip that we saw in the first half of economic activity in 2021, and it's growing at just under what were pre-COVID expectations of growth of about 6%. The drivers of growth that we've seen since the pandemic have been exports, with high demand for Chinese manufactured products amid stimulus and ongoing COVID-related disruptions abroad, and investment, particularly into the real estate sector. The weak spot in the recovery has been domestic demand, which, although it is recovered back to growth, continues to grow at levels falling short of pre-COVID rates. I think if you looked at the recent data out, I think it was last week from August, the growth in retail sales compared to the same month in time, 2019, is about 1.5% a year, which is well below the pre-COVID levels. Restrained consumption could be part of the new normal for economic conditions here, at least for the short to medium term. There appears to be a tendency amongst Chinese consumers to avoid large gatherings and travel less to minimize the risk of infection or lockdown, or being caught up in a lockdown or contact tracing exercise. I guess we've got the Golden Week holidays, the National Day holiday coming up, and that'll be another sort of benchmark by which we can see how much appetite the Chinese consumer has to travel and spend. Turning to the second thing I wanted to talk about, the trade and economic relationship with Australia. At a very high level, the trade relationship between Australia and China looks to be quite strong. If you look at merchandise exports, for example, in the first 7 months of this year, Australia's exports to China were up 32%. In a similar vein, in the other direction, imports to Australia from China were up 4.7%. So clearly there remains a strong complementarity between the Australian and Chinese economies, and Andrew will elaborate on this in terms of the commercial perspective later on. But if we step down from that high-level perspective, part of what is driving the growth in trade between Australia and China is high commodity prices. In particular, up until now, the very high price of iron ore. And these high prices are masking the impact of various Chinese measures against Australian exports. So if you exclude iron ore, merchandise exports were down 29% over those 7 months. And iron ore actually made up over 3/4 of the exports, merchandise exports during those 7 months at 78%. And what we've seen, and I'm sure the members will all be highly aware of, is a variety of trade measures against imports from Australia, including some WTO-permitted trade remedies against imports of Australian wine and barley. We've seen technical requirements at the border and licensing requirements impacting some exporters of beef, cutting out exports of timber, and heavily impacting exports of lobster. And we're also seeing state direction of Chinese state entities not to purchase Australian coal, either as power generators or steel producers. So clearly these are having an impact once you take out once you factor out the high prices for iron ore and commodities. On the services trade side, Chinese authorities, we've seen them last year issue directions, either the Ministry of Culture and Tourism or the Ministry of Education, discouraging tourists and students from travelling to Australia and warning them about potential risks. We saw another warning from the Ministry of Education earlier this year. But essentially we're not going to know what the impact of these kinds of warnings are on our key services exports of students and tourism while borders remain shut. So at the moment, discussion of that is just a little bit moot. We know that there are still a lot of Chinese students who are studying online from home. I think the last data we had put it at nearly 86,000, or about 61% of the 140,000 Chinese visa holders. The other element of the economic relationship is investment. now, looking at over a long period, we've seen investment flows from China decline in the last year, in 2020, by about 62%. It's very difficult to make generalizations about what's happening here. It's consistent with a broad trend of reduced Chinese investment abroad that we've seen happening since about 2017. But it's also likely that there are bilateral considerations at play. It's just not possible to generalize to what extent it is driving a slowing of Chinese investment. The third thing I wanted to talk about was the bilateral relationship. Clearly, the political impasse is now more entrenched. It's more public. Over the last 6 months, some of the developments we've seen is the Australian government cancelled 2 Belt and Road deals between the National Development and Reform Commission and the Victorian government under the new Foreign Relations Act. And Beijing responded by indefinitely suspending the strategic economic dialogue between the Treasurer and Trade Minister and the head of the National Development and Reform Commission. The Australian government has also initiated 2 dispute resolution actions in the WTO against China's trade remedies, its anti-dumping and countervailing duties on wine and barley. And Beijing responded very shortly after the announcement that we would seek a dispute settlement within a week by launching its own action in announcing that it would launch its own action in the WTO against a variety of Australian anti-dumping and countervailing decisions relating to railway wheels, wind towers and steel sinks. Clearly, China's measures are not having the desired impact. They're certainly disruptive. If I stepped the impact a further level below, there are clearly industries that are experiencing hardship, and the impact is varying sector by sector. Several sectors have been able to diversify, albeit often with lower returns. And I guess we're seeing in this quite clearly in the coal sector. The Treasurer has recently noticed that our economy has proven remarkably resilient. Exports of the goods targeted by China are estimated to have fallen 5.4 billion in the first 6 months of this year. But the exports of those same goods to other parts of the world correspondingly grew by 4.4 billion. That's not to downplay the fact that some sectors and individuals are doing it hard, just to note that the desired impact is not being achieved. The situation is, of course, deeply unwelcome and regrettable. It's not something that we see as desirable. Senior Australian ministers, from the Prime Minister downwards, have repeatedly expressed a willingness to discuss our differences with China without preconditions. China is currently not prepared to do so until, in its own words, we have demonstrated sincerity. Again, this is a deeply regrettable and unwelcome situation, but we currently don't envisage a quick or easy fix. This is where there aren't any indications of a quick or easy fix on the horizon. So the advice from the Australian government has been consistent that it's prudent for businesses and others to factor in an extended period of difficulty. There's potential for further disruption. Broadly speaking, what's happening is we're engaged in, and I think the Ambassador has said this himself to the Business Council in the past, we're engaged in an extended negotiation to define the parameters of the relationship with China, a China that's bigger, more ambitious and more demanding. It's not just Australia doing this, but it feels like we're at the forefront of this process. This doesn't mean that we've given up on the relationship. It's just we're hopeful that in the medium to long term, the respective interests and the attributes of the relationship will be allowed to develop in the same way that they've been able to develop so successfully in the past, if they can be allowed to return to operate uninhibited. As I mentioned, and as Andrew will elaborate on further, the economic complementarity between the Australian and Chinese economies remains.
Okay, that's great. Thank you, Kevin. Thank you, Virginia, and congratulations on your appointment as the National Executive Officer for the ACBC. Good morning, good afternoon, everybody from wherever you might be joining us. If it's from Victoria, I hope you don't feel too rattled from the surprise earthquake this morning. For those that don't know me, I'm Andrew Carter. I'm Austrade's Trade Commissioner for Education in Greater China, so I lead our education promotion work across mainland China, Hong Kong and Taiwan. So Kevin's covered some of the big drivers here, the bilateral relationship, political factors shaping the economy and the macroeconomic situation. I'll focus more from the commercial perspective, the operating environment, key trends and consumer demand. I want to acknowledge the challenges, but also where we see opportunities. So I'll highlight our Shine with Australia campaign in China and some of the digital activities we are delivering. It's important to know that, while we do face real challenges in the China market, we enjoy broadly positive brand perception here. Chinese consumers want the kinds of clean, green, safe products and high-quality services that Australia can provide them. We'll also talk a bit about some of the market share impacts out of the trade barriers in China our exporters have faced. So logically, where China's trade measures against us have redirected our trade, other exporters will look to fill the gaps. So what's the operating environment like for business? We know it continues to be tough. The global pandemic continues to restrict travel, which has been particularly hard for our international education and our tourism sectors. It's impacting logistics and global supply chains. For cargo, for sea freight, pricing has ranged from 30 to 300% of pre-COVID levels, depending on timing. And there are imbalances and port congestion, stringent health protocols to deal with. For air, we've also seen restricted flight availability. The IFAM program has really helped a lot to maintain those critical supply chains, and that's been extended through to mid-2022. For business, not being able to move your essential staff and engage with partners and customers on the ground in the same way is challenging. Doing more by digital has been a key response, and we've doubled down on our efforts in this space, which I'll come back to. As Kevin discussed, we've had a deterioration of the relationship between Australia and China and faced trade measures against a number of our exports. So now many exporters are factoring in a high level of risk, and importers here are sensitive to risks around sourcing Australian product, even in other sectors. However, while acknowledging the enhanced risk for business, which is significant, there are significant opportunities too. Businesses will continue to make commercial decisions based on a thorough assessment of the risks and the opportunities. And we continue to see many mutually beneficial commercial relationships operating successfully, and deals are still being done. So in this environment, we encourage businesses to maintain those ties with China, but to consider a China Plus strategy. China remains a major trading partner for Australia and will very likely continue to be well into the future once we settle into a new equilibrium, whatever that may look like. So Kevin touched on this, about where we stand with the Australia-China trade relationship. Despite the trade barriers, as has been widely reported, overall our trade with China remains strong. Elevated commodity prices have masked the reductions in some other areas, and that's attributable to iron ore in particular, which was sitting above US $230 a tonne in recent months, but has now fallen back to below $100 a tonne. Nonetheless, still well above the $55 per tonne assumption in the budget. Minerals do still dominate the export mix. The single largest export to China is iron ore. The second is LNG. Gold is important, previously coal as well. But it's also important to kind of bear in mind the scale of this trading relationship. And even without that minerals trade, our exports to China for the first 7 months of this year were more than to Japan, our second largest export market. In addition to various agriculture exports, pre-COVID, service industries were growing and have become another key pillar of the trade relationship. And thankfully, education has been relatively resilient despite the challenge of closed borders. China remained our largest education export market in 2020 at $7.6 billion in revenue. And we see a range of potential opportunities across the economy, servicing the demands of upper and middle class consumers, home to a growing middle class of over 400 million people and many citizens able and willing to pay premium prices. And there are certainly short-term risks here, and in some respects there always have been, but our economies are particularly complementary, our commercial relationships are deep and long-standing, and our people-to-people links are strong. So before I kind of dive into where we see some of the key opportunities, I thought I would also just cover some of the big trends that are shaping China's consumer demand. Firstly, today, over 20% of the global middle class live in China. An increasingly sophisticated and urbanised consumer class are demanding safe, reliable and high-quality goods and services. Chinese people are becoming wealthier and more health conscious, and these shifts play into areas of Australia's advantage. While China boasts around 20% of the world's population, it holds only around 9% of its arable land, and this suggests that imported food will continue to be a critical part of the mix here for a long time to come. China has a significant ageing population, and the population of which is approaching 20% as well, and that's presenting significant demand for high-quality health services. As well as the growth in its middle class and ageing population, China's urbanisation story still has further to run, indicating continued demand for raw materials. China is expected to have 220 cities with over 1 million people population by 2030. And provincial governments continue to pursue city and industry cluster strategies underpinned by connected infrastructure. But when we look at the Chinese consumer, it's not just about what they need, it's about how they get it. And China is now approaching 1 billion citizens online for the first time, and it added over 85 million online users in the 12 months to March 2021. China's perhaps the most digitally sophisticated market in the world. And e-commerce is now firmly front and centre. China's online shopping population exceeds 782 million. Quite a compelling statistic. During last year's Singles Day sales, China's annual online shopping extravaganza, Australia was the 4th most popular source country, with consumers snapping up our health and wellness, cosmetic and food and beverage products. China's the largest sportswear market by value in the world, and that's a space that's been typically dominated by foreign brands. But one trend we are observing is that local consumers are turning to domestic brands. And I mention it as an example of growing consumer brand nationalism, and that's something to take into account. It's a trend here supported by ever-increasing sophistication of local brands, their in-market understanding and advertising advantages, and their rising capacity. We can draw a lot of guidance on the future direction of China's economy from the 14th five-year plan, and it sets goals around increasing consumer spending, innovation and technology. So where do we see the opportunities? On food and beverage and ag, noting of course the list of products facing trade barriers. Despite these measures, other ag and food beverage categories continue to do well here. Wheat, dairy, summer fruits, for example, remain strong. And now there are emerging subsectors like the plant-based protein market taking off here in China. For dairy, consumer demand is going into lines beyond liquid milk and powders. Chinese consumers are acquiring a taste for cheese and cream and yogurt. It's already our largest dairy export market, and we're second here in market share, behind only New Zealand for imported products. One advantage is that dairy is perceived by many as having important health benefits, particularly for children. Salmon exports are trending well, benefiting from the duty-free access they gained under CHAFTA. And for beef, demand is high, and those Australian exporters that have retained access continue to enjoy high prices. Health is one of the bright spots in the Australia-China commercial relationship, as we heard at the recent ACBC Health Summit, if you were able to catch that. China is the world's largest market in complementary medicines and the second largest medtech market, growing quickly. Australia remains China's largest supplier of imported supplements and health foods. Brands like Blackmores and Swiss are market leaders here. Demographic shifts, as well as changes in lifestyle and diet, are driving an increased burden of chronic disease. And upgrading health capability is one of the focus areas in China's five-year plan. The five-year plan seeks to build a powerful public health system focused on increasing both quality and efficiency and the improvement of elderly care services. Australia has great capability in many of these areas of demand, and we've seen some excellent investments, partnerships and deals done in recent years. from cancer care to aged care, architectural design to biotechnology. It's a broad space, and we continue to support a range of Australian health companies in market. On education, there are structural factors that support demand. Demand for places at high-quality institutions continues to exceed supply, and many families will continue to look to international education to help realise their children's potential. We're behind only the US and the UK in total Chinese higher education student enrolments. As to Australia's future market share, we do face a challenging competitive position at the moment. So far, though, enrolments have been relatively resilient, even positive at some group of 8 institutions with commencement starting online. However, agents are reporting to us that they're seeing growth in applications to the UK and Canada. As Kevin mentioned, we're not going to know the extent of the impact of things like the study abroad alert, safety warning, and ongoing border closures for some time yet. But China's our largest source of international students, and we expect that to continue. According to the 2021 White Book on Chinese students in overseas education, released by the education consultancy EIC Education, Australia was the 3rd most popular destination for overseas study this year at 16%. Regarding China's digital economy, the 5-year plan promotes digital tech innovation and application from smart cities to smart logistics to smart energy to smart and green manufacturing and smart health. And we're currently supporting Australian business engaging here across a raft of digital tech subsectors, from e-commerce to smart cities to fintech to immersive media to data analytics and digital health. Obviously, engaging on digital tech in China is not without its challenges and sensitivities around data security, IP and dual use, for example, but there are opportunities here, and we're here to help with advice for firms who are in these industries and interested in engaging. There are many other sectors that also present opportunities for Australian business. For example, the gradually opening financial sector, ambitious renewable energy targets, the ever-growing infrastructure network and smart city implementation, and the development of a more sophisticated logistic network. What is Austrade doing to promote Australian exporters in market? So over the past 18 months, as I mentioned, we've really dialed up our digital engagement. Part of that has been in response to COVID, with people unable to travel here, but we did start to implement this pre-COVID in recognition of the increasingly digital marketplace that China has become. Building on the success of a digital campaign we ran here last year, which reached an audience of 120 million, we launched the Shine with Australia campaign in July, which has generated over 9 million impressions to date. This B2C and B2B campaign covers a range of offline and online events across Greater China, working with our state and territory and industry partners to promote Australian capability and products. We're doing more around live streaming events and online business matching. But I think a real strength of this campaign is that it can speak directly to Chinese consumers. Positive sentiment, we track it across all our promotions in this campaign. It remained around 70%. And the current campaign sentiment is tracking broadly the same. So this suggests that Chinese consumers, for the moment at least, seem able to separate their own positive experience of Australian products from the negative rhetoric they might be hearing in media. However, at some point, the negativity you would think would weigh on our brand perceptions. How is Austrade helping businesses more broadly, which goes to the China Plus strategy that we've mentioned? It's a broader Austrade point, but we're supporting business who wish to consider alternative markets and a diversified consumer base to protect them against changing demand, including through the Agribusiness Expansion Initiative for export opportunities in new markets and the Export Market Development Grants Program, which we've reformed and reimburses up to half of all eligible international marketing and promotional expenditure, up to a total of $150,000 per business each financial year. However, we do recognise that businesses can't just forge new business connections and change supply chains overnight. Establishing a business presence in a new market takes time, and we have 80 plus offices around the world to help exporters with connections and business intelligence. So on the question of trade displacement and our market share, China was the leading export destination for many of the affected export sectors that in some cases faced a sudden disruption. Thankfully, we've seen many of our affected exporters able to successfully pivot and redirect their goods to other destinations, especially bulk commodities that trade on global markets. But for some, finding new markets has been challenging, particularly wine and rock lobster, for example. And as Kevin mentioned, we recognise diversification is not easy and can mean lower prices and lower returns. In this context, not surprisingly, exporters from other countries have sought to target the opportunities created from our situation and backfill the demand. In coal, we've seen increases from Indonesia, Russia, Canada and Mongolia. In lobster, we've seen increases from New Zealand, Mexico and Vietnam. In wine, we've seen increases from France, Chile, Italy, Spain and the US. In beef, we're still the largest supplier of chilled beef, despite some plants being able to regain certification and have being unable to regain certification and have suspensions lifted. But in frozen beef, US sales have been climbing and they've taken our lead as the largest import supplier. Now, markets are dynamic, impacted by a range of factors, as Kevin noted. Just looking at the case of beef, there's supply side factors in Australia and a recent suspension of Brazilian beef in exports to China following 2 cases of atypical BSE. And there's also the US-China trade deal. Monthly beef exports from the US to China have more than doubled this year, which is in line with commitments made under the Phase 1 trade deal signed between Beijing and Washington. So there are switching costs and longer-term impacts from Australian products being pushed out of the market. A hypothetical return to the status quo wouldn't see trade automatically just bounce back to where it was. Some consumers may evolve their tastes. Wine drinkers that enjoyed a bold Australian Shiraz may discover that they like a Chilean or an Argentinian Malbec. And Australian sourcing specialists will recalibrate. Tsingtao Brewery's processes were optimised for premium Australian barley and they now have to source elsewhere. And others will invest in growing their capacity and adapt their product profiles for the Chinese market. So to conclude, businesses will continue to make their own assessments of risk and opportunity. Although the current climate for doing business here is challenging, China remains a market of significant opportunity into the medium and the long term. So while we are helping China-exposed businesses access other markets, if that's part of their strategy, Austrade continues to support a large number of Australian exporters who are either in China or are exploring China as a potential market for their products or services. And this support includes the broad range of Austrade services, from the provision of market intelligence to business matching and promotional activities and support. Things are often changing rapidly here for particular products and sectors, and we're intent on sharing speedy market intel with Australian business and key stakeholders. We update our website frequently, and we've done countless webinars like this one over the last 18 months. While headlines understandably focus on some of the real challenges that we've seen playing out, there is nuance to the story, not least that Australian brands continue to carry cachet with the Chinese consumer seeking clean, green, high-quality products. So I would encourage you all to keep an eye on our website, which is a key way that we provide timely updates. And if they are relevant to your sector, to sign up to some of our newsletters, like in covering e-commerce, education, other subjects and sectors. So please do reach out to Austrade to discuss your interests and how we can help you. Thank you.
Thank you very much to both Andrew and Kevin for that really comprehensive update. It's really good to re-emphasise that the economic complementarity between the two countries obviously remains, and that China is still a significant market and there are opportunities. So, as you say, the ability to pivot and remain nimble is important, and you are there to help, as is ACBC. So thank you very much for that presentation. Now, we're going to move on to some questions. We do have a couple of rather political commentary, which I won't go into, but I will be sending that information by email to our speakers. It's more of a comment than a question, or comments than questions. But very, very pleased. Please, if you do have comments, put them in the box. I will forward them on, but I won't regard them as questions. We do have a question from Dong Wang, and he is asking, what is the likelihood China will discontinue the FTA with Australia?
Sure, I'd probably better take that one. We've always considered that a low likelihood. That would be quite an extreme option by China. We haven't seen it do that sort of thing in the past before. That's not to say we can rule it out entirely. I guess I would... So that's sort of been our position. I guess with the announcement last week of China's request to accede to the CPTPP, I imagine the likelihood of such an action would probably go down even further, just because that would definitely complicate China's interests in that area.
Oh, good. Thank you for that. Now, one for Andrew in the sort of education sphere. How do we make education projects attractive to Chinese partners, especially during the pandemic period?
Thank you, Virginia. It's a great question. We continue to enjoy a strong foundation for education partnerships here. We've got a reputation for quality and for producing job-ready graduates, and we are already a leader in transnational education. We've currently got around 200 active joint programs and 20 joint institutes in higher education VET between Australian and Chinese education partners. However, approvals have slowed and there's been few from Australia in recent batches. I think in this environment and with the Chinese system placing even more emphasis on quality and the return from these T&E arrangements to the Chinese side, collaborations are more likely to get support where they align with priority disciplines, linking to China's development agenda and ambitions set out in the 5-year plan. So advanced technology, but I also think I wanted to recognise that that VET, I think had a lot of potential in this space. China has laid out in its implementation plans under the 5-year plan for VET really strong internationalisation and capacity building goals for the VET sector. And I think as well, Australian institutions might want to consider education projects outside or beyond just award programs, custom programs tailored for Chinese corporate clients, or train the trainer programs with Chinese VET providers or institutions, curriculum licensing and support opportunities. And in this space, we see health as a particular area with strong potential. My colleague Rhett covered this at the ACBC Health Summit, but we see opportunities around continuing professional development programs to GP and specialist capability training. And for those in the VET space that are kind of interested in what I just mentioned before, we'd encourage them to take a look at our skills heat map product on the MIT, which identifies province by province particular priority areas across China.
Now, I've got a very broad question here from Michael Atkins, who's the Director of International Enrolments, Australian Boarding Schools International. And I will just highlight here before I ask the question that we will be happy to send Michael a link to our event tomorrow that we're running in Victoria, which is recalibrating for the new reality of international education. So we'll be pleased to send you that link so that you can book into that event. But his question is, can you provide updates on the schools sector? Now, that's a very broad one. So, Andrew, if you can perhaps give us some direction on that one.
Absolutely, and I welcome the education questions. So as we know, China is our largest source market for the schools sector by some margin, around 45% of our enrolments. But when we look at the latest data, commencements are down around 40%. And so we really acknowledge the difficulties that the sector is facing. One kind of slightly more helpful development, unlike the higher education sector, which is facing 60% of student visa holders from China still offshore studying online. It's a lower percentage for the school sector with students able to be in Australia. Looking ahead, there are factors pushing in different directions. There's a shifting education regulatory environment here around curriculums, including more ideological education, a move towards English being optional in school exams in some provinces, banning foreign textbooks. And some parents might look at this and be motivated to seek a Western education for their children. However, the growth in the international schools and bilingual schools here in China over the past decade has been enormous, and that has shrunk the pool. I think the market of students looking to be going overseas. So overall, for study abroad, I think it will be challenging even when borders reopen. And authorities here have indicated that they don't support younger children going abroad for education. For curriculum partnerships, we already have around 50 schools offering Australian higher school certificates, but there are also a few challenges that we face in that space too. And domestically, private schools for the K-9, the compulsory years, they're undergoing a period of increased regulation and what appears to be a drive towards some consolidation in the sector. So that seems to be driven by educational equity motivations. But again, if they are your potential partners, that there are big changes that are being worked through in the domestic regulatory environment here at the moment. So I'll be catching the presentation tomorrow. It looks very interesting, but I'll also be speaking at the AIEC conference on the 6th of October, and I'll go into the school sector in a bit more detail there as well. But also happy to have a more detailed conversation offline after this one.
Terrific. Well, perhaps we can hook you up with email addresses, so that's terrific. Thank you for that. Now, perhaps moving on to a slightly different area regarding to geopolitical situation. How do potential investors on the ground in China view our geopolitical situation? We hear much about this in Australia, as it's a big deal to large sectors of our business community, and the topic has been picked up by our major news agencies. But Australia is only one of the many traders trading with China and the Chinese people. So how is our political situation viewed by the ordinary person or a potential investor?
Look, I might go first on that one. I think it's a kind of a question about disproportionate importance and awareness. I mean, we only account for about 2% of China's exports. Obviously, they're a far higher percentage for our exports. So on that basis, you could say we're enjoying a disproportionate amount of coverage in Chinese state media lately. But look, for investors, of course, they're cognizant of the bilateral relationship, as well as changes in Australia's regulatory arrangements for foreign investment. I mean, as part of our job here is that we are communicating these changes to make sure investors understand the landscape. So, we continue to welcome investment from any country in any sector where it's in the national interest to do so, and that's what our foreign investment review framework is set up to do, and each proposal is considered on its merits. So whilst, I understand that there is this context and bilateral relationship is of course very topical in the domain of foreign investment, but the overwhelming majority of foreign investment proposals from China have been approved. We continue to welcome investment from China. And in the second half of 2020, more than 250 investments with at least one Chinese partner were approved through FIRB, and that accounted for about 20% of our total approvals. So here in market, I think we could say privately owned enterprises are our main focus, and we're targeting our investment in around a few areas where we see the greatest synergy and potential. So health, agritech, renewables, and the circular economy are particular focus areas, but of course there are broader opportunities as well.
Yeah, so it was quite a broad question. The only, just in terms of the average Chinese person, the only observations I'd just add to what Andrew said, which is very focused on the investor perspective, is Andrew already pointed out that, the signs are that the brand that Australia has is still quite good amongst the average Chinese consumer. And, in terms of what the average person thinks about Australia, I think the observation is correct that, the average Chinese person has consumed about a wide range of different things, just as the average Australian is, and they're not necessarily focused as much as you would get the impression from the Chinese tabloids on some of the developments in the relationship. If you asked the average Chinese person, they would probably reflect upon a visit that someone they knew who travelled to Australia in the past, or an observation about their broad impressions of the country, which are generally quite favourable. So, I think there is a bit of a disconnect between what we see in the press here and what the average punter would say. And I guess the only other point I wanted to just make was just that, the relationship that everyone has an opinion on here is the US-China relationship. And obviously, compared to that, we are, to the Chinese officialdom and to the average Chinese person, we're much less of a focus. And that perhaps gives a bit of insight into how there's a tendency for China to view a lot of the system here to view a lot of its other relationships through the lens of its rivalry with the United States. And so, those are the only observations I'd add.
I think for the ordinary person on the ground in China, we also recognise that they're getting their information from a wide range of sources. So yes, in state media there has been critical commentary about Australia over the past 18 months, but people are getting information from social media in particular, and they'll have their groups, they'll have their friends, and there are so many people here that have first-hand positive experiences with Australia or with Australian product, not least the 600,000 Chinese who have studied at Australian universities and come back into China. So yes, there is that kind of pressure, that negative media viewpoint that's being broadcast here, but again, there's a wide range of sources where people draw that information from and also check against their own kind of networks.
Yes, that's very important. And the diaspora here play a huge role in getting the good news up to China. Very true. Thank you. Now, our good friend Guy Thomson from the ANZ Bank has submitted a question. Do you have examples of Australian business engagement with virtual trade show attendance in China?
Yes, thanks for the question. We're doing more and more of this out of necessity, of course, because people can't come to market, but also because it's efficient and it meets the market where it is. This is such a e-commerce driven digital marketplace, and virtual business matching makes a lot of sense. Last week we hosted a virtual business matching session pairing Australian consumer brands with Chinese e-commerce traders and platforms. So the Australian brands all dialed in from Australia. But I think what's key is we had the samples sent along in advance. So on the Chinese side, they were able to, have a video conference with the supplier, but they'd have the products in their hands. And that addresses one of those key challenges of virtual trade shows, because it allows people to hold, or smell, or taste, or try the products. So we're going to continue to innovate in the virtual trade space. It's not going away. It's getting bigger. We'll adapt to challenges as we meet them, but we think it's really a really strong way forward for Australian business. And we've been doing quite a bit of this under our current Shine with Australia campaign that I mentioned, and a campaign that we're doing in Hong Kong at the moment. We've done some virtual. We've done some of these kind of virtual matching around food and beverage promotions, and that's worked really well as well.
Oh, thank you. I'll jump to an online question now. This is for Kevin. Given both China and Australia have similar COVID control measures, and with minimum daily COVID case numbers, is there any discussion for a travel bubble or a corridor between the two countries? Question without notice. Sorry, Kevin.
No, that's fine. I guess I just make a few observations. One, there is a lot of work going on in Canberra across a variety of agencies and cross-agency task force on the question around vaccination passports, recognition of vaccination from other countries, and what sort of travel arrangements will move to in the future. So China has, as I said at the start of this discussion, managed COVID quite well within its borders. And so China is an obvious candidate for travel. There are of course a whole range of factors that get taken into consideration in government decision making around this, so that ease of movement, what sort of vaccinations, how do we recognise them? So there's a whole host of considerations that step beyond just the case numbers that you see in the media every day. So I don't have anything concrete to add about whether there are any plans for a travel bubble with China. There are clearly other priorities that the government has been working on first. New Zealand, for example, those arrangements have come first. The only thing I can say is that there is a lot of work going on this, and is caught up in other streams of work relating to vaccination passports and the like.
Thank you for that one. Now, moving on to energy. Miles Lawrence, the trade advisor with the Queensland Government's posed a question. What is the interest in emerging renewable power and fuel in China, such as hydrogen?
That's great.
Thanks, Miles. It's a great question. Of course, China is a vast market for renewable energy. It's got its targets to reach its peak of carbon emissions around 2030 and achieve carbon neutrality by 2060. It's already the largest producer of wind and solar energy, and around 30% of the energy mix here that China generates is from renewables. We saw renewable energy under the spotlight in China's 14th five-year plan released earlier this year, and it's predicted, directed even, that solar PV and wind power will be the main sources of added power capacity to China's grid over the next 2 decades, overtaking hydro generation, which is currently the second largest generation source. So, at the forefront of the plan is ambitions to construct a series of mega-sized clean energy complexes integrating different power sources. And I think these will generate opportunities for new storage technologies such as utility-scale battery and power and gas facilities as well. China doesn't have a national hydrogen strategy in place, but hydrogen is addressed in the plan as a frontier area. And the industry is still in its infancy here, but it's recognised as a critical growth area. So China has shown it's committed to developing the sector as part of one of its new strategic industry areas, particularly around green hydrogen. We hosted a new energy roundtable here, and I think it was a really positive event. It reinforced the strong interest on both sides in cooperation in technology and energy technologies, and in particular, Chinese investors active or interested in working with Australian providers of leading edge capability. So we think hydrogen will emerge as a key source fuel in the future, and we're already seeing some applications emerge here in China around fuel cell vehicles, particularly passenger buses. So we see China emerging in the future as not only a producer but also a global leader in the R&D side for applications of hydrogen into the market across the economy.
It's good. That all goes well for the future, and all the work that's being done in Australia on hydrogen as well, which is terrific. And just to note, we are going to run a national hydrogen update event with our West Australia, Queensland and Victoria branches in November, so keep an eye out for that one. Now, I know you've said there is no quick or easy fix, and one of the questions here comes from Lou Farinotti, our good friend at Holding Redneck, our senior partner there. He's asking, are you seeing a drop-off in Chinese wanting to do business in Australia, and conversely Australians wanting to invest in China, given the current state of tension between the two countries? And he asks, is there any prospect things will get better sooner rather than later? But I think you've alluded to that fact that'll be a little difficult, but I'd be interested in your comments in response to his question.
Yeah, okay.
Yeah, look, I mean, ultimately, these are decisions that every individual business is going to make based on the sector they're in, their attributes, and of course, their own assessments of risk and opportunity, as we mentioned. As Kevin said, we don't want to generalise. Certainly, in some spaces, the bilateral relationship has or will have a dampening effect, but in others, things are continuing without negative change, at all. So, particularly I mentioned, health services and aged care. We've seen such strong growth and solid collaborations in that space, strong engagement and interest. And I mean, of course, it's not just one factor that's influencing, markets and sentiment and investment and trade at the moment. It's the overall global environment. There's a lot of pressure from COVID, from reduced growth and shifting regulatory environment here in China. So there are a lot of factors at play.
Yeah, that was the only thing I wanted to just note was just, I think I mentioned it earlier, but it's not just us who are facing a downturn in investment. There has been changes to the domestic regulatory settings here around outbound investment, and there's been a broader trend of declining investment since 2017. So we're not alone in experiencing this.
Good, thanks for that one. Now, I do encourage people to pop questions in the chat box. We've got a few in there, so I might go to one of those. Here's another question without notice. Can you please provide some statistics and insights on horticultural exports? As an exporter, we are actually under great pressure, even though there's no official announcement from China concerning horticultural products. Now, I don't know what particular product that is, but I guess in general, if you want to answer the question.
I don't have statistics. Yeah, look, I don't have statistics at hand, other than noting that horticulture is a promising area that aligns really well to Chinese consumer demand. But I think as you've mentioned here, I think it reinforces that informal barriers can be just as challenging for a business as formal ones. So we're sorry that you're facing these difficulties. Please do talk to Austrade about how we can help in this market and other markets. There's a lot of commodity lines that fall under that space. We've seen peaches, mangoes, other fruits growing as well. But of course, it's a pretty technical space, and there are SPS protocols and custom treatments and other things that are kind of outside the info I have at hand. So happy to have a chat with our agriculture leads with you, and we can kind of get to the nub of the problem.
Good, thank you for that. Now, I do have another couple of questions. I'm encouraging people to pop things in the chat box. And while we're waiting for some more to come through, if Kevin and Andrew can give some thought to any further comments you would like to make when we get to the end of the questions, because I think we're probably a little ahead of time. But I've got another 2 questions here coming through. What is Australia's way ahead in terms of economics and trade amidst the current uncertainty of the bilateral relationship? What are the things we can celebrate and work on whilst global geopolitics find its new norm amid COVID-19 and recent political developments? And they're referring to things such as Beijing's relationship with the new Afghan administration. So you can choose who would like to answer that. Thank you.
You want to go first?
It's a very broad question. So I gave a bit of an outline at the start of where we're at sort of the political level, some of the sectors in Australia that have been impacted as a consequence. That can sort of paint a very gloomy picture. I think the question is right in the sense that there are things that we should continue to celebrate, and I think the government has said this on a few occasions that there continue to be strong complementarity between Australian and Chinese economies, and it's underpinned some of the resilience of the trade despite the difficulties at the political level, and so that complementarity remains. The other thing that remains is the fact that there are many people, including amongst your membership, who have built and sustained relationships with Chinese counterparts over a very extended period of time. And that is something that we should still celebrate, that we should still encourage. We have talked about the need for businesses to think clearly about the risks around the Chinese market and the potential for disruption. But that doesn't mean that, those relationships are still really important, and the government wants as much as possible for businesses to be able to get on and do what they do best. securing revenues and profits and exchange and trade, and those are things that we want to celebrate and we want to keep going forward.
Agree with everything Kevin said. Australia, we have a highly competitive economy. We're very attractive. We're a global safe haven. And we shouldn't shy away from highlighting our successes. We've got world-beating companies, and we've got great capability. And in China and markets all around the world, Austrade and our partners, we're working to promote that. In China, and as for other markets as well, of course, relationships are critical. Even at a time where trade may be impaired, there's a huge long-term benefit from maintaining those connections to help position for when recovery, does arrive at the kind of new settling point in future. So, we encourage businesses to continue to look for opportunities for when the time is right. Particularly, here in China, it's a vast market. Its influence is continuing to grow. It's a big part of our future. So, a China Plus strategy may make sense for many businesses.
Thank you. Now, here we've got another question online. Do you see the Foreign Relations Act impacting the ability for fulsome engagement with China at a subnational level?
Yeah, I guess you have two representatives here from the economic side of government, so we're less well placed to comment on some of the political dimensions. I guess my observation would be that the vast majority of agreements that have been reviewed to date, we haven't seen any of them touched. So, my sense would be no, and I would also think that the Australian government continues to encourage engagement at the people-to-people level. While the political relationship might be difficult, we're certainly not discouraging engagement outside of the level of the federal government, and it's that act itself is about aligning arrangements at a subnational level to ensure that they're consistent with policy settings around the national interest at the federal level, but it's not intended to curtail engagement.
Yeah, I agree. And look, that the framework is intended as a transparency mechanism. It is not directed at any one country. I know, talking to the university sector, they have myriad of these arrangements, and it's taking some time to work through them. So perhaps that's had a chilling effect while they work out where they stand with all of this. But certainly this is not intended to be discouragement from collaborations with China or any other country. It is just creating a public register and bringing some transparency to these arrangements, which do form part of the Australian national interest.
I'm just now the final question that we have pre-submitted here was that in relation to doing new business with Chinese business partners, how should that be approached in light of the diplomatic tensions between Australia and China? How would you be the best way to handle that?
Look, again, it comes back to the complementarity, and if there is a commercial pairing that makes sense for both parties to the engagement based on their assessments of risk and opportunity, then, if it makes sense to pursue it, then business should pursue it. We shouldn't kind of prematurely seed ground in a space because of, these concerns. There's still a lot of potential and there's still a lot of opportunity here.
Yeah, I think as Andrew highlighted earlier, that's really a decision for individuals and their own commercial circumstances.
Fine. So we've come to the end of the questions. I'm just wondering, do you have any comments you would like to make, or conversation between the two of you, or anything that you would like to ask, I guess, of any of the people who are online to comment on, if you'd like to make some closing remarks?
Look, just to say that, please do, keep an eye on our website. That's where we're providing we're trying to be as timely as with our updates as possible. Please do reach out to Austrade if we can discuss your interests here in this market and how we can help. And just to reinforce that point that we have such long-standing ties in the commercial domain between Chinese and Australian business, and it's really in our interest that we preserve those and keep those open lines of communication, because they'll be vital to our positioning for the recovery. When we reach the new settling point.
Terrific. Well, thank you very much to both of you for giving us your time. It's been a very enlightening discussion, and I know our members greatly appreciate you sharing your thoughts and your expertise with us. Greatly appreciated by all of us. Finally, for those who'd like to continue the discussion on the education area, as I mentioned, we have our round table on recalibrating for the new reality of international education tomorrow at 12. Australian Eastern Time. That's on our website, as are details of other ACBC events. And I just did a quick count. We've got around 30 offerings between now and the end of the year for you, from boot camps to export events to all manner of information and knowledge exchange. So please do keep an eye on our website for all those details. I'd like to thank our members online today who have zoomed in and help with the staff at ACBC and Andy Poo up in Beijing. And thank you very much for that. We look forward to seeing you all online again very soon. We wish you health and safety. A very happy Mid-Autumn Festival today. Hope you're celebrating. And in the meantime, yes, everyone do stay safe and well. Thank you very much.
Thank you.
Thank you, Virginia.
Thanks. Bye.